Hello everyone. Thanks for joining us. So today we are here to discuss the UK manufacturing production, which will be out in about 9 minutes, and I hope that my colleagues will also join me as soon as possible. Due to some technical issues, we had to postpone the date release for 1 or 2 minutes anyway. But meanwhile, I'm going to start with the fundamental part. So as you can see on my screen, at the current moment, the forecast for the UK manufacturing production month-on-month data is at 0.2%, while the prior figure stood at minus 0.2%. And here I think it is very important to mention that the manufacturing production in the UK fell for the third straight month in December, dampening optimism over the country's economic outlook, as the official data showed on the February 10th, if I'm not mistaken. In a report, the UK Office for National Statistics said that manufacturing production decreased by seasonally adjusted 0.2% in December, disappointing expectations for a gain of 0.1% and following a decline of 0.3% a month earlier. Basically, on an annualized basis, the manufacturing production fell at a rate of 1.7%, worse than estimates for a decline in 1.4 after declining at a rate of 1.2 in November. But right now, as I said already, the markets are expecting improvements in the January report with an estimate of 0.2% for this particular data release. Let's move on and talk a little bit about different experts and economists' opinions on the matter. So, as always, according to the views of different representatives of different banks and financial institutions, we have the Bloomberg survey summary, where the median estimate stands at 0.2, average 0.12, a high estimate 0.5%, and the lowest estimate is minus 0.5%, while the total number of estimates has reached 20 for this time. And of course, as always, I have a couple of quotes from the experts. For example, here we have the CMC Markets economist Michael Hewson, who says that the manufacturing sector has borne the brunt in the global economic slowdown over the past few months. And once again, the UK economy is in the crosshairs today with the latest ONS manufacturing and industrial production data for January. Then he added that December was an extremely disappointing month with sharp declines in both as 2015 came to a disappointing end. The expectation is for a rebound in January, a 0.4% rise in industrial production, and a 0.2% in the manufacturing production, according to Michael Hewson. Then he also says that this would be in line with a similar improvement seen in the January PMI numbers, but could well prove only temporary given the sharp drop seen in the February PMI data. Well, yeah, let's see what was there, what is going to be there, and everything else as well. And of course, Dukascopy community member sentiment on the sterling versus the US dollar currency pair, where we see that traders at Dukascopy are relatively bullish on the matter, 53.76% bullish votes versus 46.24% bearish ones. And of course, we have a couple of comments here, but I think that Michael right now is more than ready to jump in with his technical part. So if it is so, then please go ahead. If not, then I'm going to read out the comments.
Thank you, Kate. Hello, everyone. For today's data release, I've chosen the negative surprise trading strategy, expecting the data to be worse than anticipated. And of course, we have the cable currency pair, the sentiment for which is somewhat bullish, 56.70%, and the US dollar being being bought, my mistake, in 56.03% of all cases, and the sterling being sold in 44.90% of all cases. Concerning the penny orders, we have a large percentage, almost 3/4 of all orders in the 50 pip range to sell the British pound, while in the 100 pip range it's only 59.44%, but also to sell the cable. Concerning other market participants, the sentiments of other market participants, Oanda has a bullish sentiment of 55.16%, while Saxo Group has traders equally divided between bulls and bears, with the bullish side slightly prevailing over bears. Sentiment is 50.15%, and the daily FX also has a bullish sentiment of 59%. If we move to the market reaction table, where we see the reactions for the previous 5 date releases of the UK manufacturing production. The largest reaction was 30 pips, and the smallest one was only 8 pips. But we also see that in the previous 3 releases, the data disappointed us rather significantly, indicating a decline in the manufacturing production contraction. So there is a rather high chance that we will see a worse percentage today as well, especially since the forecast is rather positive. So based on these reactions, we can calculate the average one, which is approximately 24 pips, and this is the average reaction we can expect today. Based on this reaction, we set the take profit and stop loss levels accordingly. The stop loss level is currently located at 1.4248, and unfortunately there are no other levels to strengthen this resistance line. So in case the data is actually better than anticipated or manages to meet expectations, we might even see the volatility stretch beyond this line. About the take profit, it's located right on top of the 1.42 major level, which is quite close to the 200 period simple moving average, making this a rather strong support area. But since the reactions of the negative data have been more than 24 pips, we might even see a drop beyond this level. So with 1 minute left before the data is published, I'll mention the technical indicators, which are giving us bearish signals in the longer time frames, from the daily to the monthly ones, mixed in the 10-minute and the hourly, and bullish in the 30-minute and the 4-hour time frames. But as usual, the most important one is the 30-minute time frame indicator, because it was updated specifically for the given date released 30 minutes ago, and it's actually giving us bullish signals. But this is not the main gauge of the possible reactions, so they don't always tend to be true. But nonetheless, it's giving us a bullish signal, so there is a possibility that the bear will go to the upside after all. And I would like to mention some of the forecasts from the Bloomberg survey of the top forecasters of the UK manufacturing production. Pantheon Economics expects the data to be minus 0.2%, and they were the most top forecaster of the given data release, while BNP Paribas also expects the data to be worse, to be 0% exactly. So these are the top forecasters, and they expect the data to disappoint, so we'll just have to wait and see what is actually released. We are seeing a small jump to the downside, but no significant movements. I'm guessing we have either mixed data or some with met expectations. And yeah, well, the manufacturing production is actually a lot better than anticipated. The month-on-month data is 0.7% from the 0.2% forecast, while the industrial production actually disappointed rather significantly, so hence we see mixed results, and the pair did not actually move neither to the take profit or the stop loss levels. Well, I guess that's all from my side, and back to you, Kate.
Thank you, Michael. So yeah, guys, you can see both data posted in the chat. The numbers came out better than expected at 0.7 versus the 0.2% estimates. Hopefully you got some profits on this, given that the pair didn't move that significantly. Anyway, thanks once again for joining us. Thanks for attention. Thank you for the comments. And see you at our today's Dukascopy Research webinar at 12 GMT. But right now, please don't go away, because approximately in half an hour or so, we are going to have Carl straight from Tallinn talking on the on different things which you might be interested in. Of course, we have a number of topics left for today, so stay tuned and don't miss it. Thank you very much, and bye.